Welcome back. You're watching Stockwatch with me, Julieta Televi, and joining me on this budget evening are David Shapiro from Sasfin Securities and Wayne McCurrie from F&B Wealth and Investments. If you'd like to send us questions with regards to today's budget or the stock markets in general, please SMS us 41392 or email stockwatch@bdtv.co.za. David, Wayne, good evening to you both. David, it was a very flat day on the JSE today, and I think there was some expectation that the Rand would strengthen maybe more significantly than it did. At the government raiding the forex reserves of 150 billion rand, simply because
I think you should admit to everybody that it was your fault.
It wasn't my fault. It was Claire Bissicker's fault at the Financial Mail.
Yes, I know. But if the FM had not put that article, they would never have known that buried away somewhere was all this money. It's like giving the children the key to the chocolate cupboard. I mean, it was just a matter of time before they actually opened it up and took all the sweeties. Oh, and now we're in trouble.
Come on, they're like bloodhounds. The government can sniff out money in any sort of crack or crevasse. Okay, so, but just seriously, on the issue of the Rand, because there was some expectation that because it'll help stabilize our debt, it will be currency positive. There was a little bit of that today. Or do you think actually it's more along the lines of a negative signal that you have to raid this pot of money?
I would say it's more that. I think they're deep concerns, and you might not remember, but certainly Wayne will remember back in the late 80s, early 90s, when James Cross, who was a reserve governor, he used up all our reserves to try and defend the Rand, which was coming under enormous pressure. And it's taken us almost 30 years to rebuild it up to these kind of very high levels where it's at. So I'm concerned that they will never replace us. Once you start to rob the kiddie's piggy bank, or whatever analogy I can think, or so on, you'd never replace it. Yes, it's 100 million, it's a big number, but I think that even that doesn't really ease the longer term problem. You know what I mean? It's only a short-term fix, because I think if you look at our growth rates and you look what else was said there's nothing to so-called increase that pie. And I think that's a deep concern. Yes. So we're getting a reprieve. We're getting a very short-term reprieve.
I think Michael Treherne from Vestac said it's like bailing out your drunk uncle once again instead of putting him in rehab. Wayne, there's a viewer whose question is, in principle, I'm not against the finance minister releasing the forex reserve. I disagree with a once-off release of around 30% or the 150 billion, as this exposes the sustainability of the reserve. I would have preferred a much smaller release of, say, 5 to 10% annually, as this would smooth out the fluctuations caused by unusual movements in forex exchange. What do your guests say?
Yeah, look, it's a difficult one. The underlying government finances are terrible, but in their defense, mining profitability has been decimated. We're in a commodity down cycle, and we've spoken about that so many times now. I mean, you can just look at the results. Earnings are down anywhere between 60 and 100%. So of course tax revenue is going to fall behind. And we had a windfall in the good years a couple of years ago, which actually paid for our COVID expenditure. I mean, that additional windfall of extra tax from the mining companies, especially the platinum companies. But I mean, profits have plummeted. And these are unusual circumstances per se, that you're at the bottom of a cycle, and hopefully things get better into the future. So as long as this doesn't become a continual thing, because the reserves are limited, I mean, they're not there forever. If the Rand, when, how, whatever you want to say, if the Rand strengthens, those reserves disappear like the morning dew. It's not real money. It's real dollars, but it's an unrealized gain because we account for it in rands. So it's the Rand weakness that arrives with this reserve. I mean, those rands don't sit there. They're not in a bank account that you can just go and take out. What happens is the Reserve Bank essentially creates money out of fresh air and deposits it into the government's bank account. And if they want to balance it out, they can then sell some dollars to raise the rands, but they don't have to. I mean, reserve banks can literally create money out of fresh air. in the bigger scheme of things, all put in a pot and stirred, the amount they're taking out, quite honestly, over the time period is relatively small, as long as you settle debt with it. And of course, we all know we're putting, 250 billion into Eskom. So essentially, remember the stories a couple of years ago where they said the Reserve Bank must just take on the Eskom debt? Effectively, that's partly what they're doing now.
Yeah.
But it is not good news that you are essentially raiding the cupboard.
Yeah. And if this was a corporate, I mean, Wayne, you talk about the windfall from the mining, a commodity boom and the mining companies. Mining companies cut their cloth when they have to, and you're seeing them with their Section 189 processes and cutting their debts. The government doesn't do the same thing. So, alas. Anyway,
as long as it's a one-off and not seen as an answer to all ills, then I suppose we'll have to live with it.
Yeah. Okay, let's talk about something good or potentially, who knows, I don't know, good or potentially stratospheric or horrific, depending on what comes out tonight, and that is NVIDIA's results. And David, there's a question saying, I think the social consensus on NVIDIA is driven by the chip demand that was hanging on the market for a while. There's still a shortage of semiconductors and uncertainty around chip makers. I think NVIDIA is overpriced ahead of its earnings because its price is driven by sentiment. But will the price continue to rally regardless of its earnings that will come out later today? What do you think?
I read in the FT over the weekend, one chap used the phrase paroxysm of ecstasy in AI. I mean, it's an over-exuberance. It's an outburst of emotion. And it worries me that, it really worries me, this whole thing that people are getting so worked up about what NVIDIA is going to release. No matter what they say, it's not going to be good enough. And that's my worry. Even if they're 10% above forecasts or whatever it is, it's not going to be enough. So I'm very concerned about these numbers. I'm very concerned about what's going to happen now. Everything does pivot around NVIDIA. It almost seems to be the epicenter of this whole AI boom. Yeah. How many chips they're selling and what demand is and what revenue is. It's become quite crazy. I like their business and I like what they do, but I'm very concerned about the emotion that's building up today over one set of results. So brace yourself. I've got two issues. Arsenal are playing Porto as well, so
that surely is more
important. I haven't got an easy evening ahead. Yeah,
that's a bigger issue for Shapiro.
Yeah. So Wayne, given that the market is convulsed with paroxysms of delight and ecstasy, could you say that the market itself is being dumb? And if you are a holder of NVIDIA, you just ignore what the market does and just hold. And if the earnings are good and the outlook is good, maybe the share price comes off if it's not good enough for the market, but the company is still producing the goods. Would you just carry on holding and kind of ignore the noise?
Look, ultimately, the worst thing that can happen is that share price goes down. I mean, this is a proper company that makes proper earnings. There's a hype in the share price, so maybe the share price can fall, 40%. But then it just comes back to where the earnings are, if the earnings disappoint, and then it'll probably go up again. So, you'd only, if the share price falls 40%, you'd only lose what you made this year since January.
Yeah, this is true.
So, I mean, what's the difference? But it's interesting, this hype and this excessive exuberance, to quote another statement. When you look at what's happened, we spoke a while back about the lithium price and how it's going through the roof. That's totally and utterly collapsed. Now that's hype. That's down 90%. So you must just remember that there's hype, and then there are actual companies where the worst that can happen is the share price falls.
Yeah. The one thing that has given me enthusiasm is that I saw Palantir's results, I've seen ARM's numbers, and there is real spending. When you listen to the ASMLs, when you listen to Jensen Huang, H-A-U-N-G, Wang, who's the CEO of NVIDIA, you don't know her. And, they're reporting huge interest. And if you want an NVIDIA chip, you have to wait a year for it. That's how long it is. But what the market expects, what analysts, and we know analysts get things notoriously wrong. They can never get the job numbers right. They're way out there. They can't get the US inflation number right. They get way out there. So we're left stranded here, just not understanding what's going to satisfy this.
Yeah.
Juliet, there's one other factor that I have to add that worried me also over the weekend reading on NVIDIA. The hedge funds are there big, and they've taken large position. Because hedge fund is a non-word. Hedge funds are trading funds. They're anything but hedge funds. Trading means they can go short, they can go short and long, in other words. And it worries me when the hedge funds have opened up big positions, because they're not there for the long term. They're not Warren Buffett type investors. So that concerns me as well. And I'm a big NVIDIA supporter, really, really big.
Yeah. And I mean, just to elaborate a bit on what Shapiro is saying there. I mean, these are proper companies. This is not hype. This is not the .com. The Magnificent Seven, or whatever you want to call them, are obviously massive companies with huge cash flows and big balance sheets and big capacity, but they're profitable. So the only thing that can go wrong really is not with the company per se, is the share price might come down to the reality, but the reality is good.
Yeah. Yeah.
If it does come down, as long as you didn't buy them in the last month, you'd probably still be in the profit. And over time, the share price will probably go up, because the underlying company is an extremely good company that's pumping, it's making profit, it's making cash flows. This isn't hype. This is not the .com type scenario at all.
Yeah. And the question now from NVIDIA, and a viewer says, a regular viewer, he says, wishing David all the best on the NVIDIA numbers. On to more sour things. Of course, nobody knows where the bottom is, as Wayne always says, but this set of results from Sibanye-Stillwater, sorry, I've just lost my place here, were atrocious, to say the least. It was an update. Can it get any worse? Or is the risk reward at these levels skewed to the upside? So Wayne, let me ask you first.
Well, look, I clearly do think that. And the results are atrocious, and so were Northern, and so were Amplats, and so were Impalas, and so were, name them commodity company, just about that's the results. But it's actually very, very normal and typical for this stage of the cycle. They were just as catastrophic. They were even worse. I mean, the companies were virtually going bankrupt. They were remember, Anglos were thinking about selling Kumba. The companies were virtually going bankrupt in 2014. And, the Anglo share price got down to $50. Next stop was 800. Kumba got down to 24, 25 Rand. Next stop was 600.
Yeah.
So it's not nearly as catastrophic as what happened then, because then they were hit with similar macroeconomic circumstances, in other words, a commodity down cycle, but with massive excess new production coming on stream because they thought the Chinese super cycle would last forever. Whereas that time around, at least now, we have not got excess, because they went bankrupt, they didn't spend any capex, and when they did have some money, they very wisely paid it back to shareholders in dividends. They didn't spend it on capex and expanding capacity. So that's why I don't think it'll be as catastrophic this time around as what it was in 2013, 2014, 2015. But you at the bottom of the cycle, of course, the results are going to be catastrophic. I mean, even with the weak rand, your sales are down 30%. We look at retail companies where, well, if sales are down 1% in volume, the share gets trashed. I mean, they're down effectively 30%, their sales numbers.
Well, David, the fact is they had to take an impairment, 47 billion rand. So that's horrible. And of course, and this is your opportunity to rant about impairments, because they say it's a non-cash item, but of course it was cash going into the business.
Yeah, I know. It is absolute, because it's cash that was paid before. It's cash that was invested before that is now being written off. And all they're doing is they repricing the assets to where they get economic value from it. if that makes sense to anybody listening. In other words, you write down, because you're not making a kind of decent return on it, you start to write it down where it starts to give you a proper return. So it is cash, and now it starts to make the numbers look better. You just impair their asset, but it is a worry, and it's also recognition of past mistakes and of where the market is at the moment.
Yeah. Okay.
But
Well, look, I mean, in Sibanya's defense, at least the assets that they bought, they didn't buy at the top of the cycle. They bought them at the bottom of the cycle. And that's why the share price did so incredibly well when we had the little upcycle, up until 2 years ago. I mean, the Sibanya was a go-go share. It was an NVIDIA of its day, and then it all gave it all back.
Yeah. I'm sorry to go back to NVIDIA, actually, but there was a question that I didn't see from a viewer. So I should have bunched them all together, but I didn't see this question. And he says, my daughter selected to go with NVIDIA. She's a young investor. She's now asking, with the share up 40% since then in dollars, does the panel recommend to hold or sell? I know we've discussed it already, and we've talked about the nervousness. If you're a young investor, so I presume that this person's daughter might be in their teens or their early 20s, surely you would just hold and you're in there for the ride.
Yeah. You know what I've been doing, Julieta, is that understanding this kind of run, which always is difficult. If you're there and you've had it for a long time, you've got the margin to take some knocks. But what I've been suggesting, or what we've been doing with fresh money, is buying SOXX, which is the semiconductor ETF. And the reason we go there is it's got a big chunk of NVIDIA in it, but it's also got some of the other manufacturers that are going to benefit if this AI is real. And, AMD, Broadcom, and so on. And we've seen a big pickup in demand for chips. So it just seems to be a much safer kind of bet on an industry, which I think is going to benefit from AI. Yeah. AI, NVIDIA by far the leader. But it does kind of just soften the whole thing. It gives exposure to other companies as well.
Yeah. Okay. Moving on. A viewer says, as an avid watcher of the show, I know most panelists want us to think long term, but my question to our guests isn't what stocks we should be buying, but rather what do they think about having put options on both Thungela and Sasol, given that we're in a never abating commodity down cycle, not only have the balance sheets of both these companies come under pressure, but the socioeconomic risks that lie ahead with ESG and our transition to clean energy. Question mark. Are these good shorts going into March for the short term? Wayne, what do you think?
Look, it's very difficult to short something that has already collapsed the way some of these prices have. I mean, whatever you think, Sasol is now closer to the bottom of its share price than what it was. I'm just calling up the data here, than what it was halfway through 2022 when it got to 400 Rand a share. Now it's 140 now. So if you're thinking of shorting now, you might be joining the party a little late.
Yeah.
But just to come back to this whole story, understand, I mean, I've said this many times, but I truly believe it. The bad news peaks. All the reasons to short something peaks. It hits a tsunami, a crescendo, the day before the price goes up.
Yeah. I agree with Wayne. I think not the time. We've gone back 3 years. Yeah. I think in both it might even be more.
You've gone back 3 or 4 years.
Yeah.
3-4 years. So, if it was a year or so, or even at the peak, and you could see more downside, I think it's wrong. You can see it in the platinum shares as well. It's just the wrong time to go short. Bottoms can take a long time to form. It doesn't mean it's going to be a sharp turnaround. It takes time to form that bottom, but I think there's more upside from where we are in commodities at the moment than downside.
Yeah. Okay.
Yeah, look, I mean, when you're harping on about this, but it's important. When you think of Amplats, we're speaking about Amplats now. When you think of Amplats, I mean, the share price was where it is now in October, November. You got one sparkle of good news, which was the pivot point and the Fed. I mean, this thing almost went to 1,000 rand in a month, went from 660 to 1,000 in a month with just a sprinkling of good news.
Yeah.
And now we've only got bad news, and it's now gone back to 650 or 700, wherever it is now. Understand, it went from 650 to almost 1,000 in a month.
I know these things move.
Wayne brought up a point. When the Fed pivots, when they blink again, and it's going to happen, it might not happen a month, 2 months, and whatever. These markets turn fast, and suddenly growth becomes the next subject that we talk about. And when's the next fall? And that's a big driver for the commodity prices. It weakens the dollar slightly, and there our reserves start, the balance of whatever we've got in the cupboard also starts to depreciate. Because the rand's improving, we have to revalue downwards, So just be careful. That we, as Wayne correctly said, when Powell blinked in December, you saw the effect,
Okay. Talking about, I suppose, matters political, a viewer says the election date is now set in the month of May. May is not a very good month for the market. Sell and go away being the old adage, taking further into account that the ANC probably will not get a majority and will go into a coalition with the EFF, and the EFF can't be good for markets. Would it be wise to slowly move into cash ahead of this election and wait to see what happens?
No. The effect of our elections as the shares that are affected by our selection, our politics, our government selection, is a very small percentage of the JSE. It's actually small. I would say the shares that are directly affected by our politics in South Africa is maybe 20% of the JSE. It's the banks and the retailers, essentially. And a couple of industries.
Just wait. If Julius Malema gets hold of that chocolate cupboard, we're in real trouble. He wants to have everything. So anyway, but I agree with Wayne. I think to a large extent, a lot of it is already discounted. It's only
and I mean, everyone talks and everyone goes on, and these are only predictions, You don't know the end result. I mean, the prediction is also that the EFF will become the official opposition. So these are just predictions and polls, and we'll have to see what happens.
The scary thing, I suppose, is the ANC retains its majority, and then, but that's a subject for another day. So I'm going to get onto your stock picks this evening. Okay, to hedge ourselves against imminent political madness or whatever else, David, what would you be buying at the moment?
You know what? I looked at the Chinese travel numbers. And I don't like China at all. I think there's just too much control by Xi. He wants to control when you can buy, foreigners can buy shares, when they can't. I just stay away from it. But they're spending. And we've gone into the luxury side. But the company that I think that's going to show a big turnaround, and one that I've always liked, has been L'Oreal. Just think excellent run company. And I think it was taken down by worries of China, but I think that's going to be history. And if you want to play China and you want to play also a world economy turning, I think it's a company I've always liked. And I like that consumer side, staying away from AI and all of that tonight. So just going for consumer stuff.
Good hedge. Wayne, how about you?
I've been very boring. SA government bonds. 10% yield. Inflation, even though it went up, it was still more or less in line, in fact, slightly lower than what the predictions were. I mean, this is at 5.4. You're getting a proper real yield on this thing. I know you pay tax. I got you. I understand all of that. But that's not a bad, relatively safe investment for your non-equity portfolio. Yeah.
Okay. Gents, we shall leave it there. Thank you for joining us as always. David Shapiro is from Sasfin Securities, Wayne McCurrie is from F&B Wealth and Investments, and we'll be back with a close after this. Stay with us.